Upstart, with the ticker UPST, has been in a free fall since peaking on October the 15th at $400 per share down to $90 per share prior earnings, which means the stock was down 75% from its all-time high in October 2021. But since their phenomenal Q4 earnings, the stock went up 30%. That bears the question, why Upstart plunged 75%, and is Upstart a buy right now at current levels, or is it already overvalued? Hi folks, it's Björn here, and as always I will speak first a bit about the company for the ones who don't know it, followed by a fundamental analysis, why Upstart plunged 75%, the reason why the stock is rocketing right now, followed by the pros and the cons, and at the end, as always, I give you my personal opinion and conclusion why I opened the position and at what levels. So this video is quite packed, but I encourage you to watch the whole video in order to get the full picture. And if you like informations like this, then please hit the like button and maybe even consider subscribing for more daily updates and infos. With that out of the way, let's get started. What is actually Upstart? And don't worry, I will make it short and will not read a whole Wikipedia page. Alright? So, Upstart is trying to reinvent the credit score, as about 50 million Americans can't get the credit score in the first place, or better, 4 in 5 Americans have never defaulted, and only 48% have access to a prime credit. Hence, Upstart is a AI lending platform partnering with banks and credit unions to expand access to affordable credits. By leveraging Upstart's AI platform, Upstart-powered banks and credit unions can have higher approval rates and lower loss rates for every race, ethnicity, age, gender, while simultaneously delivering the exceptional digital-first lending experience their customers demand. And more than 2/3 of Upstart loans are approved instantly and are fully automated, hence really fast and without you having to wait. And best is you can use Upstart as a borrower or as a lender, and new if you are a dealer. And I'm talking about the car dealers, not the ones on the street, alright? So now that we know what they do, let's have a look why the share price fell over 75% the last half year or so. To make it short, first, macroeconomics factors means we shifted from growth to value, as this is a reaction from rising interest rates, means institutional investors have to beat their target index and therefore need to shift, for example, from Upstart to ExxonMobil in order to make their investors happy. If not, look what happens to Cathie Wood and the bashing she receives currently. Second, Q3 results were great, but the analysts expected more, and the market being irrational nowadays, I mean just have a look at Nvidia right now, they beat expectations and the shares fall, which makes no sense. Well, it makes sense if you look at being a value investor. Third, the whole fintech sector is down. And if you don't know why, I made a video to it and I will link it at the end of this one, so feel free to check it out if you don't know it yet. Knowing this, let's have a look why Upstart is exploding right now. But I have to show you some numbers, but stick around as they are important. So, reading through Upstart's fourth quarter earnings means for the quarter end of last year and the outlook for the whole year 2022, it's really difficult to find anything to be disappointed about. Let me show you some of the highlights. Upstart's platform was used to originate 4.1 billion in loans in the fourth quarter, which is more than 4 times the volume of the same quarter 2020. Conversions on rate requests increased from 17% to 24%, indicating that Upstart's loan offers are becoming increasingly attractive to consumers. Upstart generated 58.9 million in net income from 305 million in revenue, a 19% net margin that would make most other fast-growing fintechs very jealous. For the full year, Upstart net income was 135 million and the business has been consistently profitable for years. For 2022, Upstart is expecting 1.4 billion in revenue, which would represent a 65% growth rate compared with 2021, which is insane, folks. And now the biggest and the most important info. Upstart announced a 400 million stock repurchase authorization prior to earnings. Means because prior to earnings, Upstart stock was more than 75% below its 2021 high, and this indicates that management considers the stock undervalued. And we all know what happens if a company buys back shares or what it means. No? Well, if a company buys back shares like Berkshire Hathaway does all the time, it means they produce enough cash, and that is what every investor wants to see. Second, the shares increase in value, and that's why, ladies and gentlemen, I bought Upstart right after their earnings release at $130 per share. I could have bought it before earnings release, that is right, but with the current market, I wanted to be sure not to end like a firm. So it was a safe play. But now you know what we can expect for the year 2022. Let's have a look what the analysts are saying if Upstart is a buy or not. And let me tell you this, don't listen to Wedbush, as they said after earnings to hold, which I can't really understand. Yes, Upstart has a high PE ratio with 91, but before earnings it was 103.5. And I can't understand why they always compare fintech companies with legacy banks or credit institutions. I mean, how you can compare a typewriter with a high-end gaming PC, for example. And here it's exactly the same. There is no one outside using AI in the credit space. All other banks probably writing everything on paper and don't even know or have their data in the cloud. But let me know in the comments what you think about that. Okay, I really need to calm down here. Sorry folks, but that triggers me all the time. But you get my point here, right? So let's have a look at the analysts. So we can see we have 9 ratings with 6 buys and 3 holds and 0 sells, with an average price target of $213 and 100 being the lowest and $350 being the highest rating. Now let's come to my opinion and conclusion. Upstart is a profitable, fast-growing company and a disruptor in this market with a huge moat. Means now they are only touched the surface with personal loans and just started for the auto loans, and imagine when they do this for the whole housing market. Sky could be the limit here. So yes, Upstart is expensive, but compared to the risk, for me it is a buy at current levels. And as I said, I opened a position at $130 a share and will wait how the market reacts the next month. But that is only my opinion, okay? But write me in the comments what you think, as that would be quite interesting for me and the community. That being said, if you like the video, please give me a thumbs up so that other retail investors like you and me have the chance to see this video as well, as dang algorithm likes this stuff. And if you're on my channel for the first time, I would be happy if you would subscribe, because I regularly produce new videos and tutorials on the topics of stock analysis, investment and financial products to give you the opportunity to take your finances into your own hands. That being said, if you like the content and you want to support my channel with a few bucks so I can produce even more videos, I will pin the link to my Patreon page in the comments below. That's it for today. Thanks for watching, and as always, stay focused and don't be greedy. See you next time.